Friday, May 15th, 0648 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Here we are, last trading day of the week. And one of the biggest events occurring in the United States. Most people won't be situation aware. Most media won't report. It's a huge impact on the economy, nationwide, worldwide. United States Central Bank, aka Federal Reserve, is changing leadership, out with the old and with the new. United States Senate committee approved of the pending new leadership that was selected by the executive branch, but it required two bodies of government to vent and approve. The new leadership, we will see what statements they make regarding their point of view, what they expect, and what they want to see on the situation with the economy. Some of us already are situation aware. We look at the futures markets, U.S. Treasury yields, as well as directly at the U.S. Treasury yields, U.S. Treasury Department. Give you some insight. The probability is we are not going to see the Fed lower interest rates this year. Coming into the elections of November, they're likely to leave the rates unchanged, but there's more pressure, more speculation. Rates will be raising to help fight inflation. The markets are building that into price action. So here we're looking at the three grids on the S&P 500 futures this morning. The far right is the weekly. 5 p.m. today, that candle will be completed. The middle chart is the daily candle. That would be done at 5 p.m. And the far left is the intraday 4-hour. That current candle will be done at 9 a.m. and then the next one starts. So looking at the far right, yeah, all that green, the trend is up, the momentum is up. It's bullish, made an all-time new high for the year. The middle grid, daily, we've already made a reverse, making lower high, lower low, since we made that all-time high. We're inside this testing, this imbalance area. It's one of the key levels I look at for a trade. Might be a bullish, maybe a bearish. It's also Friday. Concerns of holding equity over the weekend. That simply means, for me, if I have positions, I consider closing them or putting other ones on. And the far left, that intraday, the 4-hour. Yep. So overnight, this big first red candle overnight, we broke below those two inside candles, closed below it on that 4-hour candle, went inside this imbalance area here, this gray horizontal area, we broke below it, closed below it, big solid red candle, very bearish. And look at the next red candle, broke below it, big red body, tested these key levels I have labeled here, has a little wick on the bottom, showing probability that buyers are stepping in to go up a retracement. And this current candle, which is a yellow candle, gets done at 9 a.m., also has a wick down here, buyers stepping in here. We're making a retracement of that red candle. This does not mean we're bullish. Gives opportunities to trade on the bounce and expect a retracement. Look for opportunities to trade bearish. Yep, so multiple trade opportunities here, day trading. And we have a key level down here, a swing point. Hasn't been tested yet. Let's continue on to the next financial instrument. The 10-year yield. On the far right, the weekly, 10-year yield, new high for the year. Up strong. Yep, higher yields, higher interest rates. The 10-year yield has a huge correlation to the 30-year U.S. mortgage. Higher yields, higher interest rates, higher mortgages. Also means higher interest on the U.S. Treasury yields. We pay higher interest on the U.S. debt. Why is that occurring? Well, you have the legislative branch, aka Congress, and you have the executive branch, the president, both continue spending recklessly, spending more money that we take in, increasing the debt. And like I said, the higher interest rates have us put more taxpayer dollars earned income just paying the interest rates. But again, why are the yields going higher? Because, again, the credibility, the trust convince people to loan us money. Raising interest rates will not constantly, but raising interest rates will help meet demand. Who wants to invest in a financial instrument if the return on investment is lousy? Yes, the U.S. Treasury Department never defaulted. The United States government never defaulted on the securities of these U.S. Treasuries. But that doesn't alone mean people want to invest in it. Shoot, we go some first world, second world, third world countries, and their central banks offer higher interest rates. But again, you're putting risk where their economies are not as strong and their politics, governments are not so stable. Simply mean that you may never able to get your money back out. So looking at the middle chart, the daily, already broke the high of last night. Again, yields are higher. If you're refinancing mortgages, get a new mortgage, your interest rate will be higher. Same with your credit cards and auto loans. And the intraday 4-hour, look at that, since last night, took off like a rocket ship. Live within your means. Pay yourself first. Adult responsibility. What you earn, best to put away a certain percentage. Try to put away 30% of every income you earn for long-term investment. And then live off the difference. Instead of doing what some degenerates do, they spend all their money first and then wondering why they have no money to invest. So you may have to downsize, but you can still be comfortable. Downsize maybe in the square footage of a home, but you still got a home. Downsize in the luxury of a vehicle, you still have a vehicle. Zero mortgage, zero debt. That's a beautiful thing. And then if you put, again, the money away for your long-term investment, earning interest on that, that's a great thing. You were just taught the basics of economics, finance, investing 101, just the basic. Let's continue. Go to the US dollar index. So it's green for the week. We made a reverse higher high, higher low off that red candle last week. Big red candle there, midpoint. Look at that. We broke above it, currently above it. We're showing wick on the top. So selling pressure already, which is interesting because, again, it's Friday. We'll see how that plays out. A lot of things could change between now and the end of Friday. But looking at this, the weekly chart, and then taking a look here on the intraday, right here. Sorry, not the intraday, the daily. So again, the far right, the weekly, in the middle, the daily. We have a swing point here. It has not got tested here, that red high. We also have a gap down here that hasn't been filled yet. So that's putting pressure on the dollar, which again, we're seeing here on that top wick, selling. And then again, here on the daily, look at this huge consolidation. So we might have a pause. We may have a retracement. But still, the momentum is still up. So taking it to the intraday 4-hour, right here, that red zone, we broke above it last night. We went up on weakness. Again, here was strength. The higher candle is weak. Broke above it, this current red candle. We'll see how that turns out. We still got a while. Not till 9 a.m. is it done. But the concern is that red candle, that current 4-hour red candle, we broke the low of the prior red candle. So showing again, there were less buyers. And we're currently below that green candle. Again, see this current red candle's red, the body red, it's below. So we have a swift switch, a rotation. There's less buyers and more sellers coming in. Here's an imbalance area, potential area for me to consider a trade on this time frame. There's other time frames occurring too. Let's go over to commodities, energy. Yep, crude oil, natural gas. I have bullish positions in those still. Go to crude oil. Weekly chart inside candle. Amazing. All the price action this whole week. We still haven't taken out the high and low of last week. Forming a dodgy candle here. The daily chart. Yeah, last night when I looked at crude oil, and when it opened to last night, it gapped down. We'll get there in a moment. So here on the daily, yep, lower low, lower high. Doing a retracement of all this up here. Still in this huge wedge. Look, crude oil is not going out of business. The demand, the need for crude oil is not going down. Geopolitical events also have price action into the crude oil. That being said, like I said last night, you can see here on the left, the 4-hour. It's so funny. It gapped down. Sweet opportunity to be buying and reloading. And look at that, it reversed. Again, geopolitical. Some statement, some comment had the crude oil gap down, and immediately buyers stepped in, saw the sweet spot, the opportunity, A+ set up and bought it. Nice. Again, I'm still in my positions, bullish positions. Let's go on over natural gas, which is interesting the past few days, how that's had some nice momentum. The weekly chart, higher high, higher low. Again, the momentum's up on the weekly. I've been sharing trade ideas for that shoot quite a bit for the past few days and last week. Bullish opportunities been buying on the dips. Good job if you took them. So here on the daily, look at that staircase pattern, higher high. And currently forming a bearish pin bar. Far left, 4-hour, yep. Consolidation. Another consolidation up here. Mixed singles. Current red candle, lower high, lower low. So big body here. Might see a midpoint retest in there on the downside. And if that occurs, I'll be looking for opportunity for potential reloading. Bullish. Oops. I'll come back later, set an alert for the stock ETF. Onto category gold, metal, silver. I see gold. I'm not in gold. I'm in silver positions. Weekly chart. Yep. We did took out the high of last week and back inside last week, but we didn't take out the low of last week. Look at these weekly candles down here. Big wicks on the bottom. And we're down here retesting it. Due to the geopolitical economy events this week, yeah, we may see a reverse here in the afternoon, meaning we might see buyers step in the afternoon or later this morning in the metal gold. Daily chart. The momentum's down, coming into a swing point. Intraday here, right here. Yeah. From last night, huge sell-off. Broke below this demands on this green area. Oops, let me update this. And look at this, how we had a sell-off. We broke below these key levels. So we're in another demand zone right now. And we're having this green candle buyer stepping in right now. Update this some more. Oops, a little bit more. There we go. So this is a sweet spot. See if it plays out right. Maybe I will buy gold today. On to the silver. Yeah, look at silver forming a bearish pin bar up here on the weekly. Daily chart since last night. Broke midpoint down here. Sorry, not midpoint. Imbalance area here. Broke it. And now testing a key level down here. And big wick on the bottom. Buyer stepping in. Just doing some house maintenance, updating stuff. Oops. And the 4-hour, again, it has not tested this key level down here. So again, what I'm seeing is silver is more bullish than gold. And I still have bullish positions in my silver. Take it off to one more, or we'll come down to the last financial instrument, looking at Bitcoin. Cryptocurrency. Inside candle for the week. Yeah, for the whole week. Can you believe that? Still inside the range of last week. Forming a dodgy candle here. Again, dodgy candle forming here. Wow, potential reversal. Dodgy candle means indecision. Also, yellow candle means indecision. Very suspicious. But last week, big wick on the top. I would not be buying up here. The middle chart daily, yeah, inside trading range too. Wow, looks like more distribution. And the intraday, that big run up last night, or no, was that regular trading hours? Yeah, regular trading hours during the, wow, big pump and a massive retracement. So that's the current situation. Pre-market this morning on the futures. Good insight. A lot of financial instruments I just covered. They have stock ETFs. If you don't want to trade the futures, they also have options. Thank you as always spending just a little time with me. That's it for the video. Thanks for watching. Thank you for your support.